All right, welcome everybody to another round of Community Capital Live. I am excited for today's conversation that we're going to be having with Stephanie Swepson-Twitty, who is the director of the Eagle Market Streets Development Corporation. And also, we're going to be talking about today is the Community Equity Fund that she has helped to create. So, really excited to get to do that. Before we do, real quick, want to make a rundown for our acknowledge our partner agency sponsors and our introduce you to our hosts and into our panel here. So we this is a collaborative effort really between the Neighborhood Economics, Main Street Journal, Impact Alpha, and the Mindful Marketplace show, designed to bring you information on community investment opportunities. And so our panel is made up of Kevin Jones, who is the founder of SOCAP and the co-founder of Neighborhood Economics. Michael Shuman, who is the publisher of the Main Street Journal and has written multiple books on local investing, most recently, Put Your Money Where Your Life Is. And Jazmine Rogers is joining us today as a panelist from the Eagle Market Street Development Corporation as well. So, really excited for everyone to be here. Stephanie, we'll go ahead and get into it here. And we want to learn more about the Community Equity Fund. I know that you guys, I guess when this first started, when I've talked to you before, you've mentioned that this really came out of recognizing a problem that you saw for entrepreneurs who were coming out of disenfranchised communities. I guess just start by telling us a little bit about what it was that you recognized.
Well, thank you for having us this afternoon, Joel. And it's uh, really a good thing to be joined by all of my friends and colleagues here, Michael and Jasmine and Kevin. And I'm going to defer a moment here, Joel, to my colleague Kevin Jones, because really how we got here is through some time spent with Kevin as he was wrestling ahead of me with this challenge that he saw with entrepreneurs and solopreneurs and very small businesses struggling to get capital at a particular point in time in their business cycle. So, Kevin, you want to give
Sure.
us a little point in time here?
Yeah, it's probably about a decade ago when I stumbled on this problem of the lack of friends and family funding for some people who don't look like me. I'd raised venture funds, I'd raised tech venture funds, I'd raised impact funds, I'd raised some debt funds. And what I did was, I called some people with money and told them a story and raised some money. And I had some companies to invest in, had assembled a pipeline. And I was working accelerators, working with the first time non-college entrepreneurs that were running through Mortar, which was a black-led accelerator in Cincinnati, where we were doing a lot of work with my buddy Derek Brazil. And then Optima Business Bootcamp, same profile, 85 to 90% female, 85 to 90% non-white, almost all non-college. And debt didn't work is what I discovered. And to solve that gap, I thought, well, let's do a Kiva loan. Kiva is really $25 and you can do no interest loans up to around $10,000. And so I said, well, why don't we just solve it with a Kiva loan? And there were about 40 entrepreneurs in these two accelerators, and not one of them could do a Kiva loan because the limit on a Kiva loan is that you need friends and family funding. Specifically, you need 25 friends with $25 that they can put aside indefinitely. And they didn't have anybody like that. And so I was like, oh, this problem of friends and family, I've never run into it. And then I looked, and 90% of Black-owned businesses in the United States and 90% of Latino-owned businesses in Texas, where we just did our last conference, cannot do a Kiva loan. And they are 90%. And so sole proprietors means you don't get to the fourth employee. And that's a real critical innovation gap for the country. Because if you get to the fourth employee, you become a job creator. There are all these loan programs that are set up there in these government-sponsored programs through what a group that's called Community Development Finance Institutions, CDFIs. But they don't get out there because the entrepreneurs don't have the collateral to be able to take on a loan at 8%, which is kind of typical. And they haven't grown enough to grow enough revenue to handle the service of the debt. They can't tote the note. And so I started working on that with Jessica Norwood at the Runway Project, and we built something that investors liked, but actually the credit union we worked with lost money every time. So it wasn't, there's a reason they didn't want it to scale, because they were giving so much to the investors to subsidize. And so it didn't work. And so when I got with Stephanie, that is still bugged me that there's this problem that nobody's paying attention to. There are all these funds focused on startups, and they're wonderful. But the real deal is sole proprietors maybe have 2 or 3 gigs, a couple jobs, but one of them has potential. They're making 50,000 or so revenue, heading to 100, been around 3 years. This is all the parameters that Stephanie set up because she knows the entrepreneurs in our area. But they could grow and pay back revenue share. So we set it up where they had 2 years of runway to grow. Runway really mattered. 2 years of runway, it really mattered. That's what caused them to grow. And we gave them equity capital to grow and become job creators. We just got our second tranche of the money from the county because we're the lowest cost job creator in the county, and it's really working. But nobody focuses there. I can go on about this at greater length than anyone in my family or friends wants me to talk about, because why don't you look down there? But there's almost no other fund for friends and family gap because everybody solves it with debt. And it turns out that philanthropic equity is the answer. And the other part that Stephanie and I have gone to now is working with Impact Assets, a large donor advised fund, so that if you give to invest in these entrepreneurs like Jay Hackett at Grind Asheville, who's gone on to raise millions after we put up about 60,000, and you can do Black Wall Street, et cetera, in Asheville. They can get real debt and grow in a really realistic way. And I'm really proud of how it's working. But now average people can have these donor advised fund accounts where the money comes back to them. They can adopt Jay or any of the other entrepreneurs and invest in them directly, and the money comes back to them in their own philanthropic investment account, kind of their own private philanthropic foundation that they can get for $250. And we're turning it inside out, and I think we're going to tell a story around it. So I've talked enough, but I'm really excited about that it works, and now we're making it more available to more people. So I'll hand it back to Stephanie, who actually builds these things.
So thank you so much, Kevin, for setting the precedence there. And so let's kind of recap and say that Eagle has always worked with small businesses to build assets and create wealth. And when we came to the table with Kevin, our premise around this particular program of Community Equity Fund was to try and infuse into these small businesses equity on their balance sheets instead of debt. And we wanted to do that in a creative and flexible way that allowed them to be able to scale their businesses without placing barriers that often they would encumber in traditional finance ways. So if you go to a traditional lending facility, even a CDFI, you are going to be met with the challenge of immediately a credit score is going to be part of what you are faced. And even though we look at your financials, and we often do talk about credit, that isn't the main part of what we're looking at when we're talking with our businesses. We're more looking at the character of the business that we're working with. When we do a trust agreement, we don't do notes and deeds of trust with our business. We do trust agreements because we want our business to feel like that they are a partner in trust with us. We talk to them more about how, for the period of time that we're going to be in this transaction, that we're going to rely on the trust that we have for this transaction. We take our equity stake in the business for the transaction term, as opposed to like in venture philanthropy, oftentimes, even when you take your equity stake, when you go away, you take that with you. We do not. We return our 20% equity stake back to the business. So now they have 100% of their equity. Again, as Kevin said, they get 24 months of grace with our money as they're scaling that business. And when it's time to repay, they pay by revenue share as opposed to principal and interest. So again, the Community Equity Fund has gone to great length and intention to try and stand up a program that will offer BIPOC and women and LGBTQI plus individuals an opportunity to create jobs or gain shares of the market that will allow them to create jobs that will be low barrier opportunities that would not be available in other financial markets. So I see a hand raised among my panelists. So yes.
Yeah, I
Question.
have it's kind of a question, but it's also just talking about my experience with working with the Community Equity Fund. I have the privilege to co-collaborate with Stephen, who is our Community Equity Fund manager. And partially what my role is helping to vet these businesses. And what I've noticed and what I find to be true is that really working on that narrative is really important, and it speaks to the power of how this pot of money ripples into our community. When we talk about trust-based economies, this mostly works because we're in community with these folks every single day. And so we get to see the ripple effect as it navigates and waves out into our community. And just to give like a quick example, I've witnessed some of our community equity fund recipients be able to navigate really challenging times with their businesses, and knowing that our money, as sometimes some of the first like dollars and funds that they receive, it's just such a good feeling to know that that ripple effect is happening in real time in our community and that we get to experience it. Yeah.
Thank you, Jazmine.
Yeah, so if I can kind of sum up the bullet points that I feel like are coming across here for me around what makes this fund unique and the problems that you all solve. So, obviously when an entrepreneur is starting a business, there's different levels where they may need funding. They may need capital that can either come in the form of a loan or a form of an outside investor who then has share in the company. And normally, when people are starting a business, a bank won't look at them until they get to a certain size for the most part. And so a lot of people have to kind of get that first set of funding from their friends, their family, their rich uncle, whoever that might be. But for the entrepreneurs you guys are talking about, that part can be a lot more difficult because the social capital that those individuals have is going to be different than people who come from a neighborhood that wasn't redlined, for example. And so it works on addressing that piece of it, where it's going to actually fund those entrepreneurs from those communities before the banks will actually look at them, so they can get to that size and kind of get to that spot. And then the second piece of it, if I'm understanding it correctly, is because you guys are working more on a trust model and you're in community with each other, it allows those that risk reward conversation to be more holistic, which then leads to, instead of a loan where someone owes that money back in the form of interest and, kind of what that can look like. Instead, now that investor has actually some stake there, because they're going to have a revenue share. However, whenever the profits of the company goes up, their investment return is going to go up. And so I think that that's really excellent. And I want to make sure that I've got a couple questions, and I want to make sure we get to some that Michael has as well. So should we start, Michael, with just the basic, the basic info here? So could you tell us just about kind of the size of the fund, the number of businesses that may be receiving capital from the fund, and what an average investment looks like?
Certainly. So our first round of raise for the fund was about $1,800,000. Currently, the fund balance is at about 350K we have to deploy at this time. We're in our second round of raise, and I will tag that by saying that we've been fortunate to raise pretty much from the private and philanthropic sector at this point. We meaning that we have not had to borrow or have debt capital so far ourselves, which, is something that we've been thinking about going forward, and kind of is a model. I think that as we think about the Community Equity Fund being a model where we are providing equity, do we ourselves, play that? With regards to the kinds of businesses that we've supported, our first cohort we were very fortunate. Most of the businesses that we were working with were businesses that Eagle had been supporting for some of them as long as 7 years. Eagle was a IDA program for many years, and most of my businesses were IDA candidates before they were CEF candidates. And so I had been working with them as many as 7 years, some of them. So that relationship was built, and that trust was built over many years. They involved a landscaper, a gentleman who had a coffee shop, and a gentleman who had an event center. Since that time, we've gone on to work with a tech company, a film studio, a young lady who is an amazing health service provider. And we tried not to pardon the expression, pigeonhole ourselves with our business or businesses, or find any niche, because we felt like with the target market being BIPOC women and LGBTQI plus, that we wanted to be able to be very fluid or flexible in the types of businesses that we could support. And I apologize, I forgot the last question that you asked me, Joel.
Yeah, no. So we went over, how large the fund is, what type of businesses you're investing in. What does an average investment into a business actually look like to get them,
Yes.
to get that ball rolling for them?
Right. Minimum cap or minimum investment is about 50,000, and we're capped right now at about 75.
Oh, that's great. That's excellent. Michael, I wanted to throw it to you. I know you had a couple questions, especially about who can invest in this fund and how that works.
Yeah, so Stephanie, this is very exciting. And one of the things I'm curious about is, I mean, Asheville is filled with really good foundations, and North Carolina generally has got a pretty lively philanthropic sector. Um, but I'm guessing you all want to go beyond that sector at some point. And can a grassroots investor put money into it now? And if not now, what will it take to open it up for them?
That's a great question, Michael, and thank you for asking. I think so, and I think that's kind of the wrestle that I was mentioning about, whether or not we would be, looking at debt versus continuing to be looking at philanthropic. I think that, and Kevin hit on it, his Give to Invest and DAP opportunity really does open this up to the unaccredited investor, and gives them a real opportunity, and us a real opportunity to seed this program and make it available to the global market. I think I was just recently in the eastern part of the state, Durham, North Carolina, and there's an organization there that is very interested in being able to play a role in investing in the community equity fund, and they would do it through Give to Invest. So there was another organization who would use their endowment possibly to invest in us. So yes, I think the short answer is yes.
So I think for purposes of folks tuning in here, not everyone may know how a DAF works. And honestly, I may not have in my head exactly how a DAF works. So DAF stands for Donor Advised Fund. My sense about how it works, and correct me if I'm wrong, is that I'm a donor. I write a check of, say, $10,000 to Eagle Market, earmarked for this fund. Or no, will I give you property, or do I give you a promise to my estate, or what exactly does that look like?
So donor advised funds, my understanding, would be that you would place funds into a restricted fund, and those funds then would be for those of you listening. Typically, these funds are held by foundations like um, um, a good example would be the Community Foundation of Western North Carolina is a for us in Western North Carolina, and folks place their dollars in these funds, and then they instruct the foundation what to do with those monies. And typically they use them, invest them, or into things that you tell them to invest them into. With what we are, and Kevin has a much better lens into what he would like to see happen with Give to Invest, and can explain it better than I. But with donor advised funds, the donor really gets to tell what they want to have happen. And Kevin, I'm going to pause right here and let you talk a little bit about how it would be different with Give to Invest.
Sure. Thank you, Stephanie. Oops. So here is a scenario of how it could work. Okay. And one of the things about this innovation is that we made it small. And the innovation was typically financial innovations are done for people with a lot of money, and you can move a lot of money. So what we're doing is nothing new. If you have a family foundation of $5 million or so, you've been able to give to invest forever. If you have a large donor advised fund, you could do this with a pooled donor advised fund simply if you just have to have $250,000 to put into it. We've made it so you can create your own film for $250. And then working with Eagle, we got impact assets to go down and get the money out at $5,000. So this is an innovation designed for people without a lot of money to take action collectively, okay, on something they care about. But let's just say it's the community equity fund. That's the first thing that we're doing. I will turn my camera off because I'm on the farm and I can see broadband from here, but and I should have been there. Hey, Stephen. So anyway, so this is a scenario that works, and I've done it with the initial person who put up some money to help form the fund. No, can you hear me? You should be able to hear me.
Yeah, I got you now. We got you now.
Okay,
Yep.
great. So there is a charter school in our town that is focused on climate and the environment at the middle school level. And actually, the initial donor who put in money with me to help stand up this fund had his kid there. And so here's what could happen. Mrs. Washington's 8th grade environmental science class can invest in the biomedicinals that we're bringing out from Warren Wilson. And each one of these plant-based medicine companies will have a carbon sequestration footprint so that the class is investing in climate change through local producers, producing medicine and getting the money to grow and bring it to market, working with the local college, Warren Wilson, that has a huge biomedicinal program. And so they can invest in the climate. My hope is that then when they look at their climate focus, they will say, oh, look, here are a dozen sole proprietors who are growing into being job creators, and we can also invest in economic justice. So we want the environmentalists and the folks who are working in economic justice to be able to meet together, which typically those are kind of siloed funding. The folks who fund climate are often not the folks who fund economic justice. So we want to bridge that divide as we can. And so there could be a Sunday school class that likes the economic justice focus, right? And so they get $500 together, and they set up a donor advised fund for Mrs. Johnson's Sunday school class. Okay, I'm getting to the point here. This is my first time to walk through this scenario publicly, so I'll do it a little smoother next time. But if the class gets $5,000 to go out and invest in Jay Hackett at Grind Asheville, one of our great entrepreneurs who also does Black Wall Street, then that money comes back to the class. Okay, but you can have kids who have given to invest in there for $5 or $10, but you have to actually get up to $10 to get in there. That what happens is little Johnny Smith in the 8th grade Sunday school class gets $10. He invests it. It doesn't come back to him. The money comes back to Mrs. Johnson's Sunday school class. So that 5th grader is now an endowing philanthropist. He is giving his return to Mrs. Johnson's class the next year, and he will see the money that he's invested come back, with the equity fund in 3 years. So if he's a 5th grader by the time he's in high school, that money will be back. But the point is, you can get in for $10 and you can get engaged because you will see the money come back. And that will remind you that that is something you care about. And so the money will come back. And so Mrs. Johnson's 5th grade Sunday school class that invested in Jay Hackett now has $1,000 in 3 years to give to invest again. And so they will see abundance come back to their group. and they'll
So
stay
Kevin,
connected.
one of the questions then I have is
Yes.
where does this fund live? Does it live, and in this case, does it live with Eagle Market or does it live with some other intermediary?
The money lives at the Impact Assets Donor Advised Fund platform. Eagle Market is the entity that gets it out at small dollars, so that's a Sunday school class that raises $5,000 can be part of it.
I see. Okay.
And so the fifth grader has to realize that just like a multimillionaire who endows a chair at a college or a building at another university, they've endowed Mrs. Johnson's Sunday school class with their gift. It comes back and is in a common pool.
Right. So, Stephanie, I have another follow-on question about all this. So it sounds like Eagle Market has a long-term relationship with the businesses that you're putting money into, and that is a bit of the technical assistance. Do you find that you need to step up the level of technical assistance with the companies you've put money into? And if so, is there a special additional fund that helps underwrite it?
Absolutely. So Eagle Market Streets has always been a long-term partner with Mountain BizWorks, who is a local CDFI that comes alongside us. And we've recently joined ranks with partner who's on the call with us today, Urban Advisors. Both of them provide amazing technical assistance for small business, particularly around helping the businesses understand both the business acumen side of running their businesses, as well as the some of the underwriting pieces of being able to do the business. So and what's the marketing pieces of the business. So it's you know, we have also the Catalyst Fund at the Mountain BizWorks has a program that we've been leaning into. So yes, there is additional support just beyond just being able to deploy the capital to them, Michael. Yes, I see Kevin has his hand up. Kevin.
Unmuting. Yeah, you know, this works where you have the ecosystem she's just described, a CDFI that sees this as pipeline for their own funds, and that, you know, when somebody comes out of the equity fund, they're ready for a Mountain BizWorks fund, and they realize that their money doesn't go down to the level we reach. But we looked at two cities that were interested in neighborhood economics or the equity fund. One was a town in eastern North Carolina. They loved it. They'd come and talk to us. And then it turned out that they did not know if there were any Black sole proprietors in their town. And if there were any, they weren't working with them. And it's like, okay, you got to know the problem and you got to work on it. Another city that we worked at that wanted neighborhood economics, they had this thing called Forward X City. It's one of these larger southern cities, and one in Tennessee. And it's not Knoxville and it's not Nashville. It's some other city that's about that size. And they had a Forward X City. And then we discovered the next day that people of color and LGBTQ and I folks had not been included in the plan. So you can't be planning the future without the community, and you got to know people, and you got to have technical assistance. So where all those things exist, where there is relationship and there's people working with minority businesses and they want to do something, this will work. We really want to see it replicated. And Stephanie said there's getting real interest. It's hard for folks to focus on sole proprietors because it's not a problem that white folks have. We have friends and family with money. Because of redlining and other that are related to that, Black families don't, and so and Mexican families in Texas don't. So it's a hidden problem, and so anyway, it can work any place where there is relationship.
I had another question too about the businesses that are able to receive these, the investments. Is it location based for the community equity fund? Is it a particular industry? I guess what goes into the decisions about who it is that you're really who you serve and who you don't, wherever that line is.
Right. Thank you, Joel. Up until recently, it has been very local based because most of the support for the fund came from the local market, both philanthropically and we received some federal support from the county that and was still local. Um, um, and however, we will at the end of this year, our first cohort will be returning to the fund. It's our that those funds, and so those monies will be ready for deployment, and we can deploy them globally. So that will open up new markets for us, meaning that we can really start to work at least across the state. So, and give us an opportunity to market in other areas. I really think that CEF is can be a global program or offering. So we'd love to see it, in every state. Yes.
Awesome. I know, Michael, we wanted to get spicy here, and you had a question about the legal structure.
Yeah, so one of the questions I have is if you create this sort of donor advised fund structure where it is run by there's nonprofit at the core, and I in the class am giving money, donating money into that nonprofit entity. I'm not getting a rate of return from it. Uh, is that sufficient then to pretty much exempt this from SEC regulation as a fund, and also state regulation as a fund?
So you're bowling down legal alleys that I would need my attorney aside me, but to the best of my knowledge, I've been assured by our attorney that yes, this can happen under 501c3 current guidelines, and that we do not are not bumping up against any SEC guidelines. Also, impact assets has also assured us that we're within regulations, Michael. The those folk who are making contributions to the DAP are eligible under 501c3 to still take their tax deduction. And that's why when the return comes back, they do not get to any interest or anything that comes back into that DAP. They don't get that back because that would absolutely be illegal. So, yeah.
Right. So, and when you look at the other side of the equation, and again, this may be, may need to consult with your lawyer about this, but you do have, the fund, there's sort of two levels of securities laws in all of this. So one is the fund itself, but then the other is the relationship between the fund and the business. And that is a security relationship. And I'm wondering if there is a framework for putting that together that you folks have.
So basically, we have a legal document called a trust agreement that we have between ourselves and the business. That is a legal document that was drawn up by, unfortunately, way too many attorneys. We had 12 eyes on it, and finally we said, okay, folks, we need to stop. So, but
Well, that's
yeah,
amazing because normally with 12 attorneys, you'd have 12 documents.
we finally
Yeah.
said,
Well,
we need to get this money out the door, so please stop. But yeah, that is a legally binding document. Should we ever find ourselves having to be in a court of law, that it would be again legally binding. So, but that's why at the top of the um, session, I stressed so highly that we enter into the discussion with the business, that trust is the overarching umbrella here,
Right.
and we built it into the language, which is why it took 12 attorneys, because their umbrella is not built on trust.
right. And because it's no interest, that's why there's no regulation. Okay, so you're just getting the principal back. And that's
Yeah.
the same principle as Kiva has, but it comes into your pocket. We set it up where you get a deduction and it comes into your own private, tiny philanthropic investment fund.
Right. Okay. So that's pretty key to this. So no interest means you're
Right.
not
We
a
can also
security.
give. Right. We can also give through this. And one of the easiest ways to do it is to do it as a loan with zero return. It's just
Yes.
it's a quicker way. And so sometimes you need to give and there's not going to be a return. You can do that with this as well. But this is a capital stack down below where they build capital stacks. This is a house built of straw that actually holds together. Maybe it's a cob house or something, but we are institutionalizing friends and family around for folks who don't have a rich uncle or a rich aunt.
Right. And let me one
and this is
thing.
Everywhere. 90%. I get my rants here. 90% of Black-owned businesses have this problem, and nobody knows about it. I mean, nobody. Okay, that's end of rant.
Joel.
No, I thought, Michael, did you have another question there?
Well, there was early on, Kevin, you had mentioned that you had done some back of the envelope calculations about how many dollars per job the fund was costing.
Yeah, they've done that.
Stephen has come up with what is the number they've come up with? And just I'll say to our audience that, the fair comparison here is that if you were pitching for Amazon a couple of years ago for the second headquarters, your bid would have been somewhere between $500,000 and $1 million per job. So are you doing better than
that? Well, I remember the number Stephen gave me when I asked him, Steph, if I can just jump in. I think it was between 12 and 15,000 a job. And the CDFI, the startup fund, the loan programs, the Community Reinvestment Act, the banks, it costs all of them more money to create a job. And that's because sole proprietors have the infrastructure. They're resilient. We only pick those who've been around for 3 years, and we know that they can grow by revenue share. They can do more of the thing they're doing. As Stephanie says, it's a barber school and not a barber shop. It's something that can grow at 7%. And so it's a huge, the sales tax base, the job. And so we're also measuring the number of sole proprietors. Remember, the number of sole proprietors created, the number of jobs created, the growth in revenue, and the growth in income for all those people, not to mention their cumulative economic impact. And so the county has just given us another $350,000. We got into the county. Can I tell the story of selling the county, Stephanie? Yeah, so there were 4 county commissioners who would be interested in this, and 3 of them I knew, and then the other was the big dog, Brownie. And so we got yeses from 3, which got us to Brownie saying, and then he said, I really want to help this. And I said, well, Brownie, give us a bunch of money and just judge us on how many jobs are created. What's the growth in revenue for those businesses? What's the growth in income for employees and owners? And what's the growth in revenue? And then you can also mention, growth in sales tax, growth in property tax, growth in all the things that are economic indicators, but don't count sole proprietors to job creators. And it's really working. They've given us the same amount of money. And it looks like we can, if they want to make low cost job creation a permanent part of what they do, then they would need to expand this thing. And we need to tell this story because everybody has the same problem. So it's low cost job creation, lower.
I think that's
Stephanie,
so hugely powerful because, like, to what Michael was saying before, a lot of times we hear these large companies will come to town and the promise is that, well, they'll bring jobs. But what I love about this is it's saying, well, why not just do that with the people we already have, rather than bringing in some large outside group that's just here for a tax break or whatever it might be, and they'll be gone as soon as they can find a better deal somewhere else. But low cost job creation that comes from within the community, I think, is an important piece of that.
When we get a little further,
I think this is really neat. I'm curious if there's any other last kind of thoughts and kind of recaps, or if there's any other questions that we've got from anyone on our panel. Michael, Stephen, Stephanie, Kevin, Jazmine. Does anyone have anything else they'd like to add on or ask?
We need to measure our cumulative economic impact soonish. It's another thing that we've got a track record we can show.
No, nothing for me, Joel. I'm just excited to have been a guest here today and to have been part of this conversation. More excited about being able to get on the road and take CEF to other places and get this into hands of small businesses and very small businesses, because I think it continues to be a need. And I champion all those who might be listening in to stay tuned for Give to Invest, because I think that's a way that the audience can play a part in helping us to grow it. So thank you.
And as it grows into other places, we can look at things like pooling our loss reserve with other places, because you won't need that loss reserve at the same time. And our profile of what a loss is will be the same too. So I think as we grow, our costs go down.
So I think the takeaway for me on this is that there is a very clever end run around a lot of lawyers, and this is a very powerful tool for replication. And on one side of it, it's if people are donating into a fund, that escapes one set of lawyers. And on the other side of it, if the capital that the fund is giving to the business doesn't carry interest and can be viewed as not a security, that also avoids a certain group of lawyers. And so this means that the threshold for starting it up is really pretty low. But the other thing that I think is worth pointing out is that Stephanie and Eagle Street Market has been involved in supporting businesses in Asheville for years and years. And so you've got this knowledge, you've got personal relationships. And so finding an entity like that can anchor this in a community, I think, is a really important starting place.
And there are there are nonprofit loan funds in a lot of places who could add this. And that you know, a CDC that can be a fiscal sponsor. You know, Eagle is great. Eagle does more than many CDCs, but it's not unique. There are a lot of community development corporations and nonprofit loan funds that could, one, start looking down to the 90% that they don't look at of the sole proprietors, that people don't get to 4 employees, and they can also put it on this new DAF platform where you can, in your Sunday school class or your 8th grade environmental science class, you can join in to give to invest to something that matters in your community for $10, and the money will come back to your Sunday school class. Or if you have $250, it'll come back to your own personal donor advised fund.
Yeah, my mind is starting to go, and I feel like we could go for another 45 minutes to an hour now, because I just started thinking about the ways that all the different types of organizations, you know, whether it's you know, even how this could be used for worker-owned co-ops, companies, social co-ops, all of those types of groups. You mentioned the development corporations. Yeah, this seems like this could be a really perfect technology to partner with the work that those groups are already doing to solve this problem, along with, you know, the other problems that they're solving.
Exactly right.
Thanks
Yep.
for pointing that out, Michael, that having that partner organization, I think, is really key to allowing that fund to really become something.
Stephen, do you have a question? No? Okay. And
Yeah, I would
I
echo.
can't read the other name. Taurus?
Yeah. Taurus, thank you for joining us this afternoon. And I would echo again, the partner piece is a huge piece. And while the CDC industry has dwindled quite a bit, there are not many organizations like Eagle Market Streets out there. But a new thing that has sprung up are CBOs, community-based organizations, and certainly the co-op industry is alive and well, and they absolutely are primed to be partners in this industry. But Eagle is about an enigma in the work that we do. So but certainly partnership is absolutely a mandate to be able to do this kind of work. So yeah. Stephen.
Real quick, this is all very inspiring. What I like about this collection of collaborators is how much you take it seriously, the need to have real strong local anchors to work with. Otherwise, your maximum outcomes just can't happen without these kind of initiatives. I've heard you speak on other webinars, Stephanie. Very inspired with what you're doing. I'm glad that these intersections are becoming more and more intentional, and hopefully will produce much more outcomes than over the last, I don't know, 35 years I've been involved in this kind of activity. So very inspiring. Thanks for everyone's contribution to this. And I feel so proud to even be in the same room with y'all.
Thank you. Thank you so much.
Yeah, thank you. And thanks again to our you know, our sponsors and the groups that are really making this happen. You know, we've talked about the Main Street Journal. That really is, I think, the best publication out there that's focused on local investing. Really the only one, honestly. It's kind of a one of a kind. Impact Alpha for everything related to impact investing. Check that out. My show, The Mindful Marketplace, about social enterprise, community investing, and ownership economy. And also, obviously, make sure to check out Neighborhood Economics and the upcoming conferences that they have coming up in Asheville and then Chicago. And also check out Eagle Market Street Development Corporation and the Community Equity Fund, no matter where you are, because if you're here locally, get involved with them in WNC. But if you're anywhere else, you know, learn how you can set up a similar fund and identify what those partner agencies are in your community that could really use this tool to help benefit and create a better community wherever you are. All right. Until next time, everyone, take care of yourselves and take care of someone else.